Hey guys, welcome back to my channel McNallie Money, home of all things stock, investment, and personal finance related. Now this week we've got a really interesting company that we're going to be talking about. They just came out with some huge news releases in the last couple of weeks, and they've actually got Q1 2021 results coming out this week. So I definitely think it's a timely video. The company we're going to be talking about is Sundial Growers. So they're an MJ play based here in Alberta actually, so very close to home. And I definitely think this company's got a lot of things going for it right now, and I'm gonna break those down in this video. Now before we get into it, please take a second to smash that like button. Let me know what you think of this video, Sundial's business model, and some of the big news releases in the comment section below. And as always, you guys, if you're not currently subscribed to the channel, please make sure you do so. We just crossed a major milestone of 1,000 subscribers last week, so I'm super pumped up. I couldn't be more happy about how the channel's growing, and I wanted to thank each and every one of you for your support and watching these videos. Now without further ado, let's play the intro clip and talk about Sundial. Okay guys, so that's right. Today we're going to be talking about Sundial Growers Inc. Now this company is really interesting because they've had some big news come out in the last couple of weeks. They also have Q1 earnings coming out next week on the 11th. So I thought it was very timely. And the other thing that's really interesting is part of the news that we're going to talk about is Sundial has actually taken a 10% interest in the Valence company. And as you guys know, that's currently my biggest holding or biggest position of any stock in all my portfolios combined. So this one definitely hits close to home, and I wanted to take a detailed look at Sundial's business model for you guys because this is definitely an interesting company in the Canadian MJ space here. So you can see they trade on the NASDAQ GS. Now they did have a pretty strong close as of May 7th, so Friday close, they were up about 7.5% during that trading session, which brought them up to just under 77 cents US per share. Now, if you look back over the last 6 months, you can see, like every other company we've talked about, early February there, they had some very big strength in this sector, and this company was no different. So this company was actually up close to $3 US at that point in time, and they've been on a pretty significant downtrend since then. So they've now dropped under the $1 mark. You can see here their market cap is just under $1.3 billion. So back in February, this company was well above $4 billion market cap, and it's pulled back significantly. So in my mind, this is kind of a mid-cap stock in this sector. It's definitely not a penny stock in the sense of market cap. However, in the terms of share price, it definitely does fit the bill. And in terms of my prediction for this company's price moving forward, we're going to talk about that later in the video. So I'm going to walk you guys through some of the recent news articles that just came out. We're then going to look at Sundial's business model. They've actually just partnered up with another company very similar to what we saw with Fire and Flower to really take advantage of some future opportunities in this space. So we're going to look at that as well. And then as promised, I'll give you guys my price prediction for this company. So hope you enjoy, you guys, and let's start talking about Sundial. So first up, I wanted to talk about a few news articles that just came out. So number one is this acquisition of Spirit Holdings and Spirit Leaf Retail MJ Network. So Spirit Leaf is a very well-established operator in the Canadian retail MJ space. They've got over 80 locations across Canada in multiple different provinces, so it's definitely on par with a High Tide or a Fire and Flower in terms of total retail locations. Now this transaction took place for $131 million, and Sundial is going to be acquiring all of the outstanding common shares of Inner Spirit, which is the parent company of Spirit Leaf Retail. Now if you scroll down here, you can start to see some of the details of the acquisition. So Inner Spirit shareholders are going to receive 30 cents in cash for every share they hold and 0.0835 of Sundial common shares, representing about a 9-cent value. So overall, they're going to receive 39 cents per Inner Spirit common share held, which actually represents nearly 55% premium from their 10-day moving average prior to the announcement. So we're going to look at their chart in a second here, but for anyone who is holding Spirit Leaf or Inner Spirit, you definitely got paid out handsomely. And this is one of these trends that we continue to see in this space, you guys, is big players are starting to snap up some of these smaller operators And that's why I'm so excited to have a wide array of these small cap penny stocks in my portfolio, because I feel like a lot of the big players are going to be coming after these companies aggressively in the next 6 months. And as you can see with this acquisition, with this Supreme acquisition from Canopy, you get a massive payout premium when this happens, which is really exciting as a potential investor or prospective investor in this space. Now, if you're talking just the premium based on the close price of Inner Spirit on May 4th, so not the 10-day average, but simply the closing rate on that specific date, it's actually nearly 63% premium. So huge money here, you guys. And again, congrats to anyone who has invested in Inner Spirit. You got paid off handsomely in this situation. Now, as we continue to move down, you can see some comments from the CEO of Sundial. Sundial becomes a stronger and more diverse MJ company by acquiring Inner Spirit and the Spirit Leaf retail store network. Sundial is the ideal company to acquire Inner Spirit and support the future development of Spirit Leaf retail MJ brands. So that was actually from the CEO of Inner Spirit. So you can see both leadership teams are really pumped up about this acquisition, and they really do feel like this will be an accretive acquisition for the company moving forward. So Sundial is actually Alberta based, which is cool because, as you guys know, I live in Calgary, so this one is definitely close to home. They're actually based in Olds, Alberta, so very close to Calgary, and I think this is going to be big news for this company moving forward. Now, in terms of the overall price, the $131 million, that's pretty competitive, I think. Although they paid out a big premium, the overall price that they paid for this company, in my opinion, is still a pretty good deal. If you start to look at some of the other companies like High Tide and Fire and Flower that are trading in that $400 million market cap range, the fact that they were able to get Spirit Leaf with their full suite of retail stores for under $150 million is pretty impressive for me. So here's the details on Spirit Leaf's retail network down here. You can see that it's grown to become Canada's largest single brand retailer with 86 stores operating in BC, Alberta, Saskatchewan, Ontario, Newfoundland, and Labrador. So very well diversified across Canada. Now, because of this vast retail network, they were actually able to service 2.3 million guests in 2020. So that's phenomenal. They've got a ton of foot traffic in these locations, and they're very deeply ingrained and deeply tied with their local community. So I think that's great for brand awareness and brand loyalty for the Spirit Leaf chain. And you can see that they're projected to be over 100 stores by the summer of this year. So continued growth across Canada, which is fantastic and something that I really think caught the eye of Sundial and Sundial's leadership team. So if we jump over to Inner Spirit Holdings chart here and we pull out to a 6-month, you can see that this company's been on a very good run. In December, this was around a 10-cent per share stock, and this gradually traded up into that mid 20-cent range. Now, upon announcing this news, they immediately jumped up nearly 10 cents, and they're now trading in the mid-30s. So you can see that that news was obviously great for shareholders. And once the regulatory concerns go away and we get closer to the actual close of the deal, you'll see that full share price appreciation that we talked about in the previous article. Now, in terms of market cap, this one's trading right now around $80 million. So you can see the $130 million purchase price was definitely over and above where this company has been trading historically. Now, the next piece of news I wanted to talk to you guys about is actually right here, and this has to do with the Valence company. So as you know, this is a company that I'm extremely bullish on, you guys. I just released a video about them not long ago, so if you don't know about the Valence company, please take a look at that video. I think you'd be doing yourself a disservice if you don't. This company is really involved in the extraction space, and they're now getting into a lot of the 2.0 and 3.0 products. So edibles, topicals, bath bombs, all that kind of stuff. And they just recently announced an acquisition of Green Roads in the United States. This is a Florida-based company, and this gives them immediate exposure to the United States market with the upcoming federal legalization. So I definitely recommend you take a look at the Valence company video. But in terms of how this relates to Sundial, Sundial actually went in and purchased an additional 500,000 common shares of the Valence company on May 3rd. They paid $3.66 Canadian per share, which equated to about $2 million overall. And why this is significant is because now Sundial owns over 16 million shares of the Valence company. So you can see here their total common shares held. And that actually represents now just over 10% of the total outstanding common shares for the Valence company. Now, this is really interesting. Sundial, as we just saw in that last article, has a history of big acquisitions. And I personally think the Valence company could be a potential target for Sundial in the near future here. And as we saw with Spirit Leaf, that would come along with a huge premium. So for myself, I hold about 4,500 shares of the Valence company, so over $16,000, $17,000. Now, if Sundial were to come in and offer the Valence company that same type of 50, 60% premium, that would mean essentially $8,000, $10,000 immediately in terms of profit for me as a Valence holder with that many shares. So that's something I'm super excited about. And again, I think is going to be a common trend in this industry for the next little bit here. Now, the third article I wanted to talk about before we get into the actual company analysis is their upcoming earnings release. So Sundial Growers is set to announce first quarter of 2021 on May 11th. So this week they're going to come out with earnings. I expect this to be a really exciting time for the company. We're going to look at their Q4 results towards the end of the video here, but it's definitely an important date to keep in your calendar, especially if you're looking to get involved in Sundial or you're already actively trading this company. Now, any of these companies that I'm looking at or currently hold, I try and make an effort to actually dial in and listen to these conference calls each and every quarter. So if you scroll down, you can actually see the details here. They give you access to the webcast, and if you're not able to make it live, you can actually call in and get the replay. So this is something a lot of investors really don't make the time to do, and I would highly encourage you to do, especially for those type of stocks where you're holding a significant percentage of your portfolio. So again, the Valence company was a great example of that for me. They actually hinted at some US acquisition targets in that conference call, and lo and behold, a couple weeks later, they actually came out with the news. So if you're listening attentively in these calls, they definitely drop nuggets of information and tips that you can then use to better position yourself and make money off these stocks in the long run. So this is one that I'm definitely going to keep an eye on, and I'm going to be dialing in if possible. Again, if I can't make it live, I'm happy to go in and get the replay, but this is definitely something I would highly encourage you guys to do, especially in this space where there's so much news and so much growth going on day in and day out. So we've talked about some of the big news articles, we've talked about their acquisition, their interest in the Valence company, and then obviously the big earnings date coming up this week. Now I wanted to take a step back and actually look at Sundial's business model, how the company operates, the different brand portfolio they have, and let you guys in on a little bit more detail about this company. So in terms of the Sundial story, growing safe and consistent MJ isn't something we take lightly. So again, you see the word consistent here. This is huge in this industry, and companies are really striving for that standard experience from their customers. Our customers trust us to deliver a variety of high quality products and to help them make informed decisions. We honor that trust by filling our world-class growing facilities with world-class people, experienced growers, researchers, quality assurance specialists, and more. All experts in the art and science of growing MJ. So this company at its core is really a cultivator. They're a grower. They focus on what they call the room experience. So small batch, very handcrafted end product. They've got nearly 450,000 square foot facility in Olds, Alberta, and they've also got a CPG or consumer packaged goods division. So they're actually involved in growing this stuff and bringing it to market through a variety of different brands that we're going to look at in a second here. In the presentation deck that we're going to talk about in a few slides, we're actually going to take a closer look at this facility because it is really state of the art. And this company has really set everything up to the nth degree. High quality, world-class facility that they've put together here. So these are actually the brands or the brand portfolio that Sundial has put together. There's 4 listed on this page, and there's a 5th one that we're going to take a look at immediately after. So they've got their traditional Sundial brand, Top Leaf, Palmetto, and Grasslands. Now we're going to look at each one in a little bit more detail. So Sundial is what they refer to as a modern, natural alternative. Sundial believes in health, happiness, and personal well-being. Our MJ is carefully cultivated for modern consumers, people looking for a natural alternative that fits an active, healthy lifestyle. So you can see with their branding, very calm, very tranquil, and this is really going after people who are looking for that high quality, consistent, again, experience. So continuing down, Top Leaf, as the name implies, is really their top shelf product. So they say here anyone can grow some weed, but Top Leaf isn't anyone, and we don't just grow some weed. So this brand is actually going after those connoisseurs in the MJ space, and this is really trying to knock people out of their socks. So they're going after very rich, complex terpene mixes with high THC potency that really make you say wow the first time you take a puff of this stuff. So this is their high-end or premium offering out of their product portfolio or brand portfolio. Moving along here, next up is Palmetto. So this is the handy MJ as they refer to, for people looking for quality and consistency in convenient forms, including pre-rolls or disposable vape pens. Our products are ready-made for experienced consumers that know what they like. Good MJ that's good to go. So this is kind of a more standard or mainstream brand or product offering. And then finally on this page, they have their Grasslands, which is more of an entry-level or affordable option for cost-conscious consumers, people who want a quality product at a fair price. So this is available Canada-wide in 3 varieties, which is a no-fuss alternative in a crowded and sometimes overwhelming MJ landscape. Now the 3 varieties that they refer to in the Grasslands portfolio is a sativa, indica, and a hybrid. So again, very straightforward. There's not a lot of variety or different product offerings here. It's one of each of the strains and at a very affordable entry-level price for people looking for a good bang for their buck. And this is really what we've seen with a lot of these different MJ companies, is they try and have a variety of brands that really appeal to different levels of consumers with different price tags and different go-to-market strategies. Now the 5th brand that's not listed on this page is actually this BC Weed Co., which is coined as legendary BC grown West Coast strains, which are cultivated in small craft batches. So very similar to their Top Leaf brand, but this is actually going after high THC, high potency, very top shelf product. And you can actually see it comes in these tuna can type of packages. So very interesting, very appealing. And again, this is going after that top quality or top shelf experience for consumers. And I gotta say personally, I really like the branding on this one. I think it really differentiates itself. A lot of the companies use nitrogen sealed bags or traditional plastic containers. So the metal pull top is definitely different, and I think the strain names are very catchy as well. Whether it's Nukin, Death Bubba, Island Pink, these are very unique strains, and I think people are definitely going to have interest and curiosity about trying out this BC Weed Co. brand. So we're now going to jump into the investor presentation here. Now this is from March, so it is a little bit outdated, and you'll see some of the numbers in here are quite high compared to what we just saw on their chart at the start of the video. So if you look at their market cap on here, they were north of 3.4 billion, and that's exactly what we talked about. This company was trading in the $2-3 range, and they've dropped off considerably. So now they're down in that $1-2 billion kind of market cap range. However, I thought this slide was interesting for a number of reasons. So here you can see as of the time this was put together, they had 0 debt, which is phenomenal. They've got over 400 employees, so it's a very big and well-established company, which again is a little bit different than some of the small caps that we've looked at in the last couple of months here. So it does offer a little bit more stability. Now, they've been a licensed producer and LP since 2017, and that's actually when they went public and began trading on the NASDAQ exchange. Now, since then, they've launched their fully licensed facility, which is their flagship facility in Olds, Alberta, which we mentioned, that's coming in at 448,000 square feet. So like we talked about, it's focused on small batch formulation or cultivation rooms, but they're able to do that at scale because of the total footprint of this building. So they kind of coined this as small batch at scale, which I think is really a good balance and a win-win for this company because they're able to get that high crafted, curated feel and end product, but they're able to do it on such a scale that they realize a lot of synergies and cost savings that we're actually going to see in a second here. They then talk about their different brand portfolio and their CPG or consumer packaged goods capabilities as well. Now this slide has a ton to unpack, but there's a lot of good numbers in here as well. So in terms of the operations on the left here, you can see they're available in 9 provinces. They've generated $135 million in net revenue since 2019, and they've harvested over 60 million grams. So when we talk about the scale that we just mentioned on the last slide, that's exactly what we mean here. Now, a couple things I wanted to call out here. They've actually been able to bring down or decrease the amount of cash used for operations by 40% from 20 million to 12 million in Q3 of 2020 to Q4 of 2020. So huge cost savings there. This is something, again, we've seen in this space on a wide scale, is companies are really focused on where and how they're spending their money. They've decreased the cost of cultivation per gram by 6%, so they're now able to produce a gram of finished product for $1.11, and that's exactly that small batch at scale coming to life that they just mentioned. They've worked to improve their sales mix, so in 2020, they had a 75% mix of branded products versus 25% wholesale, whereas in 2019, they had only 12% branded and 88% wholesale. And as we all know and we've seen in other presentations, wholesale does not command as much premium or revenue as the branded products do themselves. So that's great to see. And one of the main reasons they were able to expand that branded product percentage is because of new offerings. So they now have flower, vape, pre-roll, oil, concentrates, and edibles in 2020 versus only flower in 2019. Now, in terms of the financial elements of this company, they've raised over $1.6 billion in capital since they were created. So they know how to raise money and they know how to fund their operation. They've paid down nearly $230 million of debt, and they've had over 50 different financial transactions. So again, their experience, they have the relationships and the agreements in place to grow and expand as they see necessary. And that's exactly what you see in this chart here. So the greeny blue bars here are actually the amount of unrestricted cash the company has, and the orange dotted line is their debt principal. So you can see as they've moved from September 19 through to March 2021, they've brought their debt principal down to virtually nothing, and they now have more unrestricted cash, just about $720 million than ever in the company's history before. And that's a significant improvement from December of 2020, where they had only 60 million on hand. So this slide is where we really get into the actual facility itself. So as mentioned, just about 450,000 square feet. This was 100% purpose built. It's an indoor facility, so obviously in Alberta here, you need to have indoor in order to operate year round. So what Sundial's actually done is set up this facility in what they refer to as pods, and each one of these pods has a number of different grow rooms side by side. So each one of these small grow rooms is about 200 square meters, and this allows them to really cultivate on a micro scale in each one of these rooms, but on a large scale in terms of the overall facility. So they've actually got 114 of these small batch modular grow rooms at this location, and they've sold over 27 million total grams to other LPs as of Q4 2020. So they're actually able to resell a lot of this small batch micro cultivated product to other LPs in this industry if they don't wish to turn that into packaged products under their own brand names. Now, as we move forward and they continue to shift that product mix, I would expect they continue to keep more and more of this flower for themselves and continue to sell it under their own brands rather than wholesale this stuff off to other companies. But they do have the option to do that, and it does give them some flexibility in terms of their business model if they have a surplus of inventory on hand for whatever reason. So now that we've looked at some of the news articles, the acquisitions, we've looked at their brand portfolio, their operations themselves, I wanted to look at the Q4 results because these are the most recent numbers we have until the 11th here when we start to see the first quarter of 2021. So they lay this out really nicely, and there's some high level numbers here on the left that I'm going to walk you guys through. So they had net MJ revenue of just about $14 million, which was up 8% from the previous Q3 result. They had an adjusted EBITDA loss of $5.6 million, so they are losing money, but that's a 28% reduction from Q3, so they're moving in the right direction, and an adjusted gross margin of 23%, and that's actually up 3% from Q3 as well. So the numbers are all moving in the right direction. We saw their total cultivation cost per gram at $1.11, so that's great, and they've been able to reduce that by 6% over the last 3 months. They had general and administration costs of $9 million, so that has increased quarter over quarter. But again, they're continuing to scale and build this company out, so that makes sense that selling and admin costs are going to continue to go up. Their average sale price per gram is coming in at $4.14. That's down 25% from Q3, and this is a flag that I've called out in a number of these videos, especially related to cultivators or growers, is as we continue to see more and more product and more competitors online, the price that they're able to realize per gram continues to go down. Now, we saw it with some companies like G-Tech, for example, that have really gone after the top-notch, highest quality product in the industry. They're still able to command higher premiums per gram, obviously. But for companies like this that are really producing this stuff on mass scale, they're starting to see the selling price per gram reduce quarter over quarter. And this is a trend I definitely think is going to continue, especially as the US starts to come online, because they're going to be able to grow MJ at a much cheaper rate than we can here in Canada. So this is something that I would be concerned with if I was invested in this company. Not to say that this is the end all be all, and that's definitely why it's nice that they're getting into the consumer packaged goods space, where they can start to really make some of their products in-house and realize better margins on those products. But this is a number I would definitely keep in mind and definitely look for in the Q1 earnings that are coming out this week. Now, speaking of the branded consumer packaged goods product, we saw this continue to improve in Q3, so they're now selling 86% in terms of branded products. They still have no long-term debt to speak of as of the time that this was released. And again, at the time this document was put together, they had unrestricted cash of $60.4 million. So obviously that number has ballooned exponentially. We saw it's over 700 million now since Q4 was released. So overall, you guys, some pretty impressive numbers. Most of these figures seem to be moving in the right direction. The only number on this screen that would have me concerned is this gross average sales price, which I'm really looking to see where this bottoms out for these companies, because that's going to be a great indicator of their long-term profitability. And once we see where this number settles out, we can then start to do some calculations to figure out, okay, how many grams do they need to sell and produce in order to break even at these facilities? Now, before we wrap up the video, we need to talk about this joint venture between Sundial and Bancorp, or SAF. So this is actually a 50-50 partnership. These companies are kicking in a ton of money. So Sundial has actually put in $100 million, and they've since put in an additional $88 million, which we'll look at in a second. And what's actually happening here is these two companies are teaming up to look for potential opportunities in the MJ space. So Bancorp, or Sunstream Bancorp, is a company that's had a long history of generating great returns for their investors. Now, they expect the legal MJ market to reach $47 billion US by 2025. So Sundial and Sunstream really want to get this partnership in place now, lay the foundation, have the money ready to deploy. So if and when they see potential opportunities or attractive investments, they can deploy cash immediately and go after these without having to delay or potentially miss the opportunity. Now, the CEO of Sundial and the CEO of SAF, or Sunstream Bancorp, have been working together for 10 plus years, so they know each other very well. And SAF has already allocated over $2 billion of capital across more than 30 different transactions since 2014. So this company is very familiar with investing in businesses, and they understand exactly how to do it, what's involved, and which type of investments to look for to, again, minimize risk and maximize reward for shareholders. So here's another slide talking about this joint venture. So Sundial, as mentioned, has put in $100 million, which they've now upsized to 188. SAF is then going to take this money and look for different investment opportunities. So 3 of them that they call out here are obviously the United States, which I think is a huge near-term opportunity for any of these Canadian operators. And that's why I was so excited to see the Valence company enter the US through that Green Roads acquisition. They obviously have more opportunities in Canada here. However, the Canadian landscape is fairly saturated, and there's definitely a lot of well-established players currently in operation. And then outside of North America is obviously the international expansion or international opportunity. So SAF and Sundial, again, really feel like there's a number of lucrative areas in the MJ space. So it's going to be really interesting to continue to monitor this and see if and when they do find a target and make an acquisition or make an investment with this money. So this slide talks about upsizing from Sundial. So here's the additional $88 million that they've kicked in to this joint venture, which brings the total up to $188 million from its previously announced $100 million. So to close things out here, you guys, I wanted to talk about my price prediction for this company moving forward. So Sundial definitely is a well-established operator here in Alberta or in Canada. They've got a massive grow facility and they're able to really optimize that facility to get that small batch curated feel at scale. So I definitely think that does differentiate them from some of these other LPs or cultivators. Now that being said, I personally am not extremely bullish on the cultivation space, and I've really tried to put my money in companies that are involved in the consumer packaged goods side of things because I feel like that's where a lot of the growth and profit in the next few years is going to come from. Now, that being said, we've seen Sundial's sales mix shift dramatically over the last couple of quarters. And with this acquisition of Spirit Leaf, that gives them an immediate and meaningful or significant entrance into the retail space. So I think they really needed to make a move like that. And it's a step in the right direction to get more diversified and away from simply the cultivation or the growing side of this industry. So they're moving into more consumer packaged goods. They've now got a retail division. I definitely think they are going to continue to invest in the Valence company, and potentially that could be a buyout target for them as well. And if that's the case, I think that would be a huge addition to this company. Now, the other wild card here is going to be this joint venture with SAF. And I think they could really make something big happen here if they find the right target. So for me, based on my analysis of this company, I think they've made a number of strategic moves over the last few quarters, and they're really starting to become a much more well-rounded and competitive company overall in the MJ industry. Now on Simply Wall Street here, they feel like Sundial, even at that 77-cent US share price, is still significantly overvalued. So this website pegs fair value for Sundial at 37 cents US. And if we jump back to their chart here, you can see that's roughly half of where they're trading right now, which would give them a market cap of about $600 billion US. Now for me, I think fair market value for this company is probably somewhere in the middle of these two numbers, maybe in the 55-60 cent range. It's going to be interesting to see how quickly they can fold in the Spirit Leaf acquisition and what ends up happening with the Valence company. So for me, what's going to be really important here is listening in on that Q1 conference call, seeing if management gives guidance for 2021 and how they're able to answer questions about their strategy moving forward. So this is one that I'm going to have on my watch list. I'm not going to be pulling the trigger and buying any shares at this point in time, but again, definitely one that I want to keep an eye on and could be a potential pickup down the road here. Now that's it for today's video, you guys. Feel free to leave a comment in the section below. Let me know what you think of Sundial Growers, if you're currently holding shares, what you think of the Spirit Leaf acquisition, and the potential buyout of the Valence company. As always, please make sure you take a second to like this video. It really does help get this content to other people like yourself who may find value. If you're not already subscribed to the channel, make sure you do that as well. We're now finally past that 1,000 subscriber milestone, so that's huge for the channel. And as always, you guys, make sure you have a great rest of your day.